Hey everybody, Jamie DeCastro from United Financial Group, your favorite loan officer. And I just wanted to send you everybody a quick update because there's lots of headlines going on, lots of news, and sometimes people aren't exactly sure what that means. So yes, the Fed did raise their rate by 0.75% again yesterday. Now what does that mean for real estate and the mortgage market? Actually, in this case, it is good news, okay? So what we have seen yesterday and again today is mortgage rates improving because the Fed raising their rate is really trying their effort to try to stop and slow down inflation, okay? Which is what we've really been needing, and that has been the major cause of interest rates rising this whole year is the incredible rate of inflation that we've been seeing. So the Fed making some strong moves to sort of slow that down. Whether they're too little too late, that's up for debate, and everyone has their opinion on that. I do think it's a little too late. They should have started acting well before New Year's. But, at this point, we're going to take what we can get. And what we have now seen, again, is, the reason that rates jumped up so significantly is because of this inflation. And we have known for quite a long time that this was their plan, and they've stuck to the plan, which is the reason why things have not, kind of gone haywire every time that they have raised their rate. Okay, we have seen significant improvement in rates the last couple days. Okay, so this chart that you're seeing right here is this entire year. Okay, so we started in January way up here at levels 107. So this is mortgage-backed securities, and this is what drives mortgage rates. Okay, these are the securities that are traded that drive mortgage rates, and you can see when they go down this way, that means mortgage rates are going up. When we start to see them go green again and go back up, interest rates go down. So we see the super steady decline all the way through May, beginning of May. Then we kind of leveled off, but then we saw a really bad inflation number mid-June, and things kind of fell off a cliff, and that's when we really started to see things that were getting close to 6% in some cases. And now we've seen a steady sort of climb back and, a little bit of a hiccup again, but now we're starting to get back to where we were kind of the beginning of June. And what I've seen today is we are starting to break below 5 again in certain cases, well qualified depending on LTV, all that good stuff. But we're getting under 5, and especially in government loans, FHA, VA, we are well under 5. So that is great news for the housing market. We have now started to see, inventory start to build a little bit and have some more days on market for homes because a lot of buyers were just out of the market because of where the interest rates went. So if we can get those buyers back in the market with some little bit better rates, now we've got some inventory and prices have slowed down a little bit. I think we're going to really see a good end of the year this year. But if you want to know a little bit more about any of this stuff, I just wanted to let you know that the Fed raising their rate is not raising interest rates. If anybody tells you that it raises mortgage rates, that's not true. It does have some effect, but that effect has been built into these really high rates that we've seen for the past 5 months. Okay, so that we've already been anticipating all of this, so it's already in there. The fact that they have stuck with it, and unfortunately, the fact that we are starting to talk about recession. And whether or not everyone has the same definition of that, we are seeing some very key indicators that are suggesting at least a mild recession coming up very soon. And in that case, the Fed will probably start to reverse course and lower their rate, which then again will help lower interest rates more. So I really have a feeling from everything that I see and study in the mortgage market that we are going to see some good improvement in rates here at the end of this year, the last 2 quarters. And the good thing is that we've started to build a little bit of inventory, so hopefully we're not quite as hyper competitive and see very high over asking price and very high competition. We can hopefully have a little bit more of a chill housing market with some decent rates, so that people that want to buy new homes or that want to upgrade their home are able to do so and use the equity that they've built up the last couple of years. So if you want to talk some more about this, I've also got a great, seller buy down strategy for homes that have been on the market for a little while now, especially now that we're seeing some rates that are getting into the fours. I mean, we could use a seller buy down to potentially get somebody into the threes, okay, which we haven't really talked about threes in quite a while. So we can use that seller buy down on a house that's been on the market for a little while, get a little bit of seller concession, and really get someone into a mortgage that they don't have to worry about again. You know, we don't have to worry about refinancing them in a year because they're going to have an awesome rate. So give me a call, shoot me a text or an email, and we can discuss it some more. And hope you all have a great weekend. I'll talk to you soon.